Hello everyone, this is your guy Dr. Trillion Pounds from Echo Mindsets. Well, I'm here as I promised to bring you the part 2 of how to draw your support and resistance lines or locate them on your chart and be able to trade with them. In our previous meeting on the live webinar, I taught you using PowerPoint how support and resistances are located and how they behave, what they serve to be, the purpose they serve, why price changes direction once it gets to those levels. So if you have not watched the part 1 of this topic, I would advise you to go back and watch that particular video before you come and watch this one. We will put the link to that video in the card above, so you can just click on it and then it will take you to the video. Also, during the live session I wasn't able to record the part 2, so I promised you to bring you the part 2 of this video recorded from my office here and then posted onto YouTube for you all to watch again. Sorry for the delay. I should have uploaded this yesterday, but then there were some little hinges, so we couldn't do the upload and the presentation yesterday. So before I go into detail of today's presentation or video, I would like you to go to our channel on YouTube, okay, and then you subscribe to the channel if you have not done that. Subscribe to our channel if you have not done that, and also press the bell notification button to get notified anytime we come out with a new video. Okay guys, it's very important. If you don't subscribe when we come out with a new video or a new strategy, you are not going to be informed. So if you want to be informed, hit that bell notification button. So without much ado, let's dive into today's topic. Alright guys, so as you can see, we have the chart here. We have our chart here. So with this chart, we are having gold. So we want to analyze our gold. So we want to see the resistance levels that gold is currently, or the level at which gold is currently, or the level that gold is approaching. All right, and also we will look at based on what I thought in the previous video, why the market reverses at certain points, and this is as a result of resistances and supports. In other words, some people will call it supplies and demand, but they are two different things though. But then most retail traders interchangeably use these terms as one, but then they are two different things. All right, so today I'm going to show you how to locate key levels. In our previous video I told you that these levels, okay, these levels, you have to start doing the analysis from the higher time frame, which is the monthly, then you come to the weekly and then daily. Then if you still want to go down further, you can at least go down to about 4 hours, okay. And then I told you that I will normally do my entries on 1 hour, and a lot of you ask questions about how the entries and co are done, and that is I use candlesticks patterns, okay, yeah, reversal patterns, either a rejection candle, an engulfing candle, a pin bar, a piercing bar, or a harami. Okay, these are my favorite. Then morning star and evening star. But then in other videos that will come in the near future and other webinars that we are going, live webinars that we are going to hold, I'm going to teach you how to use your support and resistance levels in conjunction with either an RSI or a stochastic or any other indicator to be able to do what, to have good entries or proper entries or safe entries. Okay, so at the end of the day, you are not going to have that much drawdown. Okay, it doesn't mean you won't lose a trade or you won't have drawdown. You have drawdown, but you won't have that much drawdown. But then, well, those are for future lessons. Okay, so now let's come to the business of the day. Enough talking, let's come to the business of the day. So let's go to the chart. Well, so as I said in the previous video, to be able to draw your support and resistance, you need at least two touches. So let's see over here. Here we have a rejection, here we have a rejection, here. So we can put our line here, okay, as our hot resistance line at this point. Okay, now when we come to the down here, we have a touch and a rejection or a pullback. We have one also here, we have one here. So we cannot place our line also here. Let me change the color of this line to red. Okay, let me change this one rather to green to show that it is support. Let me change the color of these boxes. This one should be yellow to show the difference between the support and the resistance level. Remember, we are on the monthly time frame, so we are locating these key levels on the monthly time frame. So let's see over here. You realize price did reject at this area here. I think let me use the triangle for this one. Okay, so this area here is no longer a support. This has now become a resistance. Why? Because over here, okay, over here price broke through the support line over here. Price broke through this support line over here, okay, and closed below this. So this support was breached, and after the support was breached, what happened? Market moved down here and then went back up to that level. What happened once price got to that level? There was a rejection. Okay, price was rejected, okay, to this area before price finally closed above this line, meaning this has changed from what? From the resistance that it is now back to support. So we call this line a support stroke resistance or area. So this area, this whole area here is what? A support stroke what? A support. This whole area here is a support what? Stroke resistance or area. Okay, so this is what happens when price move breaks or breaches a particular support or resistance and then becomes a resistance or support in the opposite direction. We say it becomes a very key level where both sellers and buyers will be looking at in order for a change in price direction. Okay, a change in price direction. So let me take off this. Now in the previous video I was telling you that sometimes for you to get the levels very well, you use the line chart. You can change to the line chart. Okay, so if we are using the line chart, sometimes we are able to get these levels very well. So here you realize that look at the point. You see where the point is. So over here, okay, let me take this off. Over here, these are the key areas. Let me take this off. And then price finally breached this over here. Okay, right, let me take this off. Then when we come here also, these are the key areas. These are the key areas. All right, so if we look at this, you can see here we have multiple rejections here, both above and below. So this is another key area for us. So we have a touch here, a touch over here, so a touch here, a touch here, and then we have a touch here, touch number 3. So we can take this level. We have to, our eyes must be on this level. It's a very key level because we have multiple rejections there. We come below here, you realize we have what rejections over here as well. Very key. We have rejections over here as well. Very key. All right, so now we can switch back to our candlestick pattern. All right, so you can see these are very key levels. Somebody will say, oh, why did I use the line chart? Because the line chart gave me a true picture of what is happening in the market. Okay, most of the time the wicks that we see on the candles that we use to draw our support and resistance line and our trend lines are manipulations by the broker, okay, and sometimes by we the retail traders ourselves. Okay, then the big institution uses them against us, and then they trade against us, take our stop losses out, and then we are left with nothing. Okay, so this is how we locate the support and resistance level. Now this is monthly, so from here we have to go down to weekly, right? Because weekly will also have its own levels. So as you can see, you see the monthly levels here are different. They are different from what the weekly level. Let me make all the monthly levels green so that we know that that is a different time frame. Good. Now this weekly, we can just minimize this chart and then let's see what happens. Let's go to our line chart. Nice one. So over here you can see that we have, as I told you, you must have at least 2 touches. Okay, 2 touches. So let me change this one to magenta. Good. Oh, what happened? All right, so you can see the touches over here, 1 touch here, and then we have another touch, another touch, another touch over here. So that qualifies this to become both support and resistance, a support 10 resistance, or resistance 10 support. Then we come here, we can see another level here, another key level here. Okay, so this key level is also very important. This weekly time frame, so we don't joke with weekly time frame zones. You see there is a touch here, there is a touch here, there is a touch here, and there is a touch here. When we switch to candlestick, you will see that you will see a touch over there. So this is also another key level on the weekly time frame. Then we can see one here, we can see here, see that level. There is a touch over here, there is a touch over here, there is a touch over here. So that is another key level on the weekly time frame. So you use maybe different colors just to help you differentiate between the various time frames that you are doing your analysis. Okay, I think we can even get one from here. Yeah, can get one from here. So we have 1 touch, 2 touch, we have a touch here, a touch here, and a touch here. So this is also another key level on the weekly time frame. All right, so let's see, let's go to our last time frame for our analysis, which is D1. Okay, normally sometimes I use D4 also, but then most of the time I do end on D1 because they are the higher time frame. So whatsoever they are telling me is more powerful than whatsoever. Let me change this color for the line chart. Let me make it blue. All right, so whatsoever they are telling me is more valid than the noise on the lower time frame. Okay, so here I think on the daily time frame I can see this guy. Let me change this color. Let me change this to let's say black. Alright, so the daily time frame we are using black. You can see one touch, you can see one touch, two touch, three touch, four touches over there. Okay, then when we come here, very close to price, very close to the current price, where the current price is, you can see what is happening there. You can see the level of what resistance over there, resistance stroke cut, support over there, one touch, two touch, three touch, four touch, five touch, about six touches over there. So that is another valid zone on the daily time frame. Now, because we don't want our us to be confused, that is why we are using different colors for the different days, different time frames. Okay, so that you become very clear with what you are doing, or you know the various levels and which time frame they belong to. So when you are trading, you know where to exit a particular trade, where to enter a particular trade, and where not to enter a particular trade, because you will not like to be entering a trade which is close to a resistance or a support zone on a higher time frame, or a higher time frame. Because if you are trading from the lower time frame and you want to enter trade and the trade is close to a higher time frame, the possibility of a reversal there is very high, okay, compared to if you are using a lower time frame. Right, thank you. So we can spot one here, we have one touch, we have two touch, we have three touches here. So it's very valid to be called a resistance stroke support zone, support. And when we come here also, we will see this, which is one touch, two touch, three touches, four touches, which is also very good to be called a resistance stroke support level. Okay, so these are the three different time frames that we are looking at now. So now if you realize that when you switch to 4 hour, you see that the distances between these levels is high, but on the higher time frames you see them as low. So it is left over to you that if you want to locate some resistance levels on the 4 hour time frame, you can do so. Okay, you can do so, but to me, I don't normally do that. I just look for my entry on the 4 hour or the 1 hour. Okay, once I get my entry and confirm, I'm gone in, and I'm looking at exiting at the nearest resistance or support level on the higher time frame that I've analyzed. And normally I use this line charts a lot because it gives me chart patterns like M or W formation, head and shoulder formation, okay, and then breakouts. All right, so now we can switch back to our candlestick pattern, and you can see how perfect the lines we have drawn on the higher time frame are on the candlestick pattern. People do ask me that why that I don't use the candlestick wick. As I said before, they are manipulations, so I call them fake outs. They bring you fake outs, so I put them at where the line chart is telling me that this was the exact place that price actually did its thing. Okay, so when that happens, sometimes you see my trend line passing through candlesticks. It doesn't matter, those ones are just what you are seeing when we come to candlestick, but then when we are on the line chart, it's telling us, giving us detailed information. So we have to learn how to combine the two. Okay, we have to learn how to combine the two. It will help us to achieve greater height. And I think looking at gold right now, I'll not be surprised. This a quick gif. I'll not be surprised if gold will buy up to this level this week. I won't be surprised if gold will buy up to this level. That is if gold doesn't break out over here for the formation of M. If gold doesn't break here to form M and it continues to respect the uptrend. Let's go to the line chart. And draw our so you see this. Good. So I draw my trend line, then I'll be waiting. So this candle is telling me that it's trying to break out, but then look at what is happening here. We are having a support level over there. We are having a support resistance, then support level over there, which is telling me that at this time price breaking that level is the probability is low. But if price is able to break that level, that means there is a change of momentum. I'll take that sell. If not, I'll look out for a buy. So this is a bonus analysis for you guys for the week. Now let me quickly say this, but before I say that, I want to quickly say that if you have not followed us on YouTube, please kindly do so. I'll leave the link to our YouTube channel in the link below. I'll also leave the link to our Facebook channel in the link below. So if you are not following us on Facebook, kindly click on the link and like our page on Facebook. We have exciting things coming up. This is just the beginning. It's going to be a firework. The team is working hard to bring you the best. Okay, and it's free. So please go to the description below and click on the link. You will leave our Instagram page link also in the description below, so kindly go there and click on the link below. So let me quickly explain one or two things for you before I call off this presentation or this tutorial. So this is what I will have to say. When trading on resistance and support, it's always advisable to do your analysis on the higher time frame, that is monthly, weekly and daily. Once you do that, come to the lower time frame like the 4 hour, 2 hour, 3 hour or 1 hour and make your entry. Now I prefer 4 hour. If you have the capital, go with 4 hour, because 4 hours you don't need to wait for even what we call retest. But when you are doing 1 hour, there are a lot of noise there, so you have to wait for a retest when there is a breakout. Okay, for instance, this year, if we go to the 1 hour time frame, look at what will happen. Look at this. See, with 1 hour it has broken and there are some few candlesticks, but look at what is happening. You see that there are a lot of rejections here. So if you look at this as a breakout, me, I won't see this as a breakout, because for me to say there is a breakout of a trend line or a resistance or support level, I want to see a momentum candle breaking that level. When I say momentum candle, a candle like this, okay, a candle of this kind, okay, a strong move like this breaking that level. Once I see, for instance, look at this, once this came and this momentum candle broke this level, look at what happened. It came for a retest, went retest the zone again, and boom, this is 1 hour. So this few should give you, let me see how many pips. So let's say if you were to wait for the retest and you entered over here, that will be 158 pips. Goodness, 158 good pips. Are you seeing that? 158 good pips. So please, it's very good to take your trades on the higher time frame. Okay, I normally go with 4 hours when I see a breakout. So you see on the 4 hour, look at this momentum breakout. Mine is to just take my trade after this breakout. Okay, I take my trade after this breakout, and this is the reason why I'm saying I won't be surprised if gold buys up to this place, because this momentum breakout here is very strong. So this one is just doing some kind of I would say noise. Okay, so it's trying to play on your intelligence. So if you see, forex is all about patience. If you are patient, you milk this market, and it is all about good capital as well. Okay, it's about good capital. For instance, we can see here when this momentum candle broke this support level. When this one broke this support level, look at what happened. Market drove down to this level. So let's see how many pips is that. So after this, you entered on the next candle, and wow, this is 574 good pips. 574 good pips, guys. This is where you exit, because look at this. We are on the what? We are on a daily demand zone. So you always put your take profit on this level. Okay, on this level. And then after that, look at what happened. Look at what my favorite candlestick pattern, my morning star just formed here. Once it breaks this support, with this momentum candle I'm seeing here, once it has broken, I'm going into that trade. And look at these beautiful pips. So if you entered here, look at where market is now. But then we are supposed to move on this resistance zone, daily resistance zone. So that is going to be 397 pips, guys. This is marvelous. 397 pips on a trade, just one trade. Look, you are doubling your account, guys. You are doubling your account. It's simple, it's easy. You don't need to stress yourself. We stress ourselves with the chart. Me, I don't stress myself. I keep my things simple. I keep it simple. Once I get the opportunity, I go in. I don't chase the market. I allow the market to come to me. Let me tell you guys, you draw your support and resistance level, draw your trend line, allow the market to come to you. You don't follow the market. You came and the market is already buying. Market is at this. It has bought up to, market has bought from here to here, and you are now coming to buy. The market can choose to reject here and pull back down. What happens? You've lost. So you begin the trade from the beginning. So you wait for the market to come to you. You don't go chasing the market. Okay, you don't go chasing the market. So guys, that is it. Before I leave you, don't forget to subscribe to our YouTube channel if you are new, or if this is your first time, because every tutorial, every live webinar that we are going to have is going to be posted or uploaded straight to this channel. And also you can go to our website at ecomindset.com and read some forex articles there on psychology, risk management, and all those stuffs on our website at ecomindset.com. You can also follow us on Instagram. We are on Instagram, ecomindsetfs. We are on Facebook, ecomindsets. So please guys, this is so wonderful. It is an opportunity you cannot miss. Forex market is a market for you to make free money. I call it free money. Stop dashing your money to brokers. It's time to punish them for all the losses you've made in the past. Okay, and let me tell you, it's about consistency. If you fail, that is not the end. You have to sit down and ask yourself, why did I fail? And then you correct that mistake. So this is a very short encouragement I want to give to you until we meet in our next webinar in the next coming Friday. It is Shalom from the Eco Mindset team and Dr. Trillion Pounds. Thank you for watching, everybody. I love you.